Downbeat earnings led the market lower yesterday, with the Dow falling over 200 points. Global growth questions remain a concern, though markets got a bit of a boost from a positive Chinese PMI reading overnight. Today, investors prepare for another busy earnings day. I'm Nicole Urken, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Nicole Urken with TheStreet, and together we bring you the morning call. Now, Scott, yesterday we got the second over 200-point loss in less than a week. A little bit, a little bit of a nerve call for investors, whatever you want to call it.
Stomach turning.
Something. Yeah, so, as we continue to digest earnings this week, a slew of more reports today, tomorrow, we continue to question, will this move continue down, or are there opportunities? Are there entry points to come in? So after the move down, what are you looking at right here today? Fresh start or more pain ahead?
Well, there's always opportunity. It all depends on your time frame.
Yeah.
And it's been adding up. We tried to discount the market ahead of the third quarter earnings, but as they've been rolling in, the revenues continue to be a problem. You can't hide revenues, and they've been softer. A lot of the guidance which people wanted to see it's also been soft. But a lot of these type of scenarios, or a lot of the clues that we were starting to get a little weaker, were adding up last week. And if you recall, almost 2 weeks ago, that Jobs Friday, when they tried to say with 7.8% unemployment, that was sold. Then you also had last week, you had IBM come out, break its 100-day, break the 200-day. Intel was weak. Other earnings were starting to add up. Apple was pressured. And then that halt, that Thursday, you could have sold almost 1455 in the S&P or 1444 on Friday. So it's always bad if you're the last man out, or if you're selling into some type of fearful day like we had yesterday. You don't want to be selling on Dow down 240 points. You want to sell prior, and hopefully maybe even position yourself for an oversold bounce. And the futures are up like 5-6 handles, so maybe we get some type of bounce today.
Right. And as you've mentioned and talked about, this pullback is still pretty meager relative to the strength that we've seen this year. So, as we see a little bit of weakness in the market, is this an opportunity to come in, and are there individual stock opportunities? But again, from a market perspective, what levels would you be interested in coming back in here?
Well, I think in the S&P, we're kind of in no man's land, where we broke below the 50-day, but we're above the 100 and the 200-day. So if we take a look at the chart of the spiders, you will see, remember I was talking to you about the day of the unemployment came out, and everyone got all excited, went to the highs and sold off. That's what gave us this move all the way down to the 50-day in the S&P. Then we had that rally back up. Right here it looked decent. It looked as if maybe there's a chance with the home builders strong and the financials strong to continue higher, but then it didn't happen. Then more earnings started to come in and more disappointments. That's when we broke this upper level. So here was a way out. On Friday when we broke 1445, that was a way out. And then, yesterday we finally broke this trend that we've been in check with since the June 4th low. So whenever that happens, you have to be a little bit careful. You have the 100-day, which I was just talking about, coming in here at 1393. Here's a 200-day. We are bouncing today. I do not think yesterday's low is the low of this corrective process. If we do get some kind of bounce back that continues today, I think traders are going to try and sell 1425 to maybe even 1433. This will be your resistance.
Yeah, it's interesting, like you mentioned, there weren't very high expectations for earnings coming into the quarter, but we have seen some really high quality companies disappoint, like DuPont, like IBM, things that have rattled investors a little bit. So, coming in now, at least from the S&P perspective, people are a little bit confused. The other index, though, that has sold off even more is tech. The Qs have been a little bit more weak. So what does that say for the broader market? And is tech really important to key in on here?
Tech's very important. Yeah. And, before the actual correction, we were like, what's wrong with technology? Technology, It's healthy when it leads us higher. When the Russell makes new highs ahead of the S&P and the Dow, that's healthy, because typically in technology and in the Russell, that's where people are excited about growth. So technology started to break down before the S&P. And if you look here, if you guys remember, we started talking about the 50-day moving average, and it broke well before the S&P. Look at this day right here. This day was actually October 9th. This is the day when we broke support, and this was a day when you could have sold, okay? And then if you missed this day, we came back and retested. Look how symmetrical that was. Broke down, retested, and then continued lower. So here we are, right around the 100-day, above the 200-day. It's been a nice size correction. So I think, we might try and bounce here. This time we want to see if this, what could be now resistance gets rejected. So I would say for the Qs, right down like 67.26. To me, I always say what's the easy type of bounce, and the easy type of bounce would be to this area. And then if the bears want to have lower prices, they probably don't let the Qs get back above 67. So here's the playground for the bulls. Here's the line of the sand for the bears, and this is the point of reference at the lows for now.
Yeah, so indices might need a little time to repair their charts before some traders come in. But, there are a lot of broken charts, but there are opportunities that remain. And, on Mad Money, we always look at individual names as opportunities. And the name that brought the averages down largely yesterday was DuPont, which fell 9% and was a surprising miss. DuPont has been a very steady company. It's really transitioned to agriculture and nutrition, which are very strong long-term secular markets. But one of the big disappointments was its commodity business, TiO2. Pricing has come off a little bit. That's been a tailwind for it in the past. But after a 9% sell-off, this could be an opportunity from an investment perspective.
Yes.
For a trader, does the chart look a little bit risky right here?
What I like to see is when you know something's priced in, is you come out with report like you saw yesterday. And if it was priced in already, typically you open down and you retrace part of it, or maybe even go green. You don't even have to fill the gap, but just go green. And yesterday, if you look at the chart of DD, didn't happen. So I'm not sure if it's exactly ready yet, but as an investor, you don't have to be as precise as a trader, but you go to the chart and let me show you what I'm talking about. Here it is. Really there wasn't that many, the expectations were not high here. It wasn't like DuPont was trading at 52 or trading near 52-week highs. It was actually below the moving averages, so it was pretty much in line or somewhat weaker before. And then pow, here's your gap down. So we talk about huge gaps. If over the next, just say 3 to 4 sessions, it goes sideways and doesn't fill this gap, and people don't come in and say, oh, I could buy this today at 45 versus where it was pre-earnings at 49, that shows you that the demand is still not there yet. So what you do is you write down yesterday's low. That is about 40, what is this? This is 45.09. We trade through this. You could see a bit lower prices down, to another point of reference. I do think you could wait a little bit, at least, see some digestion over 3-4 days to see if this level could stick. If it doesn't, trades through here. I think you could be buying this a little bit closer to 43. If it goes right into the gap today and fills it in the next few sessions, that it was more priced in than not. So I think let the stock tell us, whether or not there's more downside or not.
So some really important levels from a trading perspective, some things to keep in mind in terms of where you want to come in. From an investment perspective, just keep in mind, DuPont has some nice yield support, a strong dividend. Again, like I mentioned, the agriculture, nutrition trends, very strong company. We've seen this company bounce back before. 9% sell-off seems a bit overdone, so you might see a little bit more downside ahead, but from a longer term perspective, it's an interesting time to come in. Very strong company right here.
Yes, you just, you don't have to be all in.
Right.
Do a feeler now. When it starts acting better, you add. So you buy some in the hole, and then when it starts trading better, you add to it. That's why we have a tier system. We never go all in or all out. Doesn't make sense.
Exactly. And Jim Cramer and Stephanie Link for the Charitable Trust always talk about buying in increments as well. And, Jim Cramer was talking yesterday, Alan Coleman really should have come out and pre-announced. This was a surprise. I think that's one of the reasons the stock sold off so big, because it has been such a steady company.
Yes.
So, if we switch to another company that's been an area of strength also in the chemical space, we look at PPG. And again, one of the reasons we're focusing on chemicals is because it's a very important read on what's happening globally in the global economy. And this is, again, we're continuing to try to get more reads. PPG, though, is an interesting case because it's been transitioning to a specialty company and away from commodities. So it actually has a lot of tailwinds just because it's been positioning itself well and has seen strength in auto and aero and its more specialty-oriented segments. And so, it's had a big run, though. So is it too late, or will this momentum continue?
See, I look at this chart, and this chart tells me there's more support. It's still trending. It hasn't broken trends. It's still above moving averages. So people are buying it on the dip, and I don't think it's too late. This one, I like it a lot better. I like it also that earnings are actually out of the way, so you're not going to get that curveball. So, you saw a little bit of corrective activity. It is below the 8 and the 21 days, so I don't think you need to be in a rush to buy it. But, it's holding this trend, a trend that's been in place for quite some time. It's above the 50. Actually, what is this moving average right here? This is it's above the 100-day, which a lot of things have come down to, and it's above the trend line. So I would say this one, is showing much more relative strength, and it looks like it's much more diverse. So if you're not committed to it, here's your stop. 113. I think as long as it holds 113, it's going to make it very easy to stay long it. And then over some time, it works its way higher and continues to trend. But this one actually looks like, the chart's still intact.
So DuPont sell-off might be an interesting entry point. PPG continued strength. The CEO Chuck Bunch was on Mad Money yesterday, continued to reiterate his positive outlook. Again, 90% of the business now specialty after the GGC transaction. So 2 names to keep in mind. And also another recent earnings piece, Celanese, had a disappointing quarter. This is an interesting one because it actually didn't really sell off. It's kind of what we've seen from some other names where expectations have been priced in a little bit, and we have some tailwinds going forward. Another specialty-oriented name. So how does the chart look to you?
Well, I like the fact when it comes out with earnings and it's supposedly disappointing and it tries to go green. And this is different than DuPont. And if you look here at the chart, you'll see yesterday, a pretty wide range bar here, where it engulfed the action. So, granted, does it look good to me from a chart standpoint? No, but at least, damage might be contained. So at this particular point, if you're an investor here, you could probably stay with it. Here is the low to trade against. Here's your 34.96. It's in a range. So for my traders, they're probably not even going to really care about it too much. It's still below the 200-day. It has some work to do, but this, seems like it's in the game. It seems like it took its earnings in stride. And if this group starts to get a little bit better, or the economy starts to get little whispers that, it's getting better versus worse, this could be something to the upside for an investor. Just, as a trade, it doesn't really look that interesting.
Yeah, so 3 important specialty chemicals names to keep in mind: Dow, PPG, Celanese. We got Dow overnight, Dow the stock, not the index. That's more of a commodity player. And in the chemical space, keep track of the commodity names as well. But on Mad Money, we've really preferred the specialty names because they have a little more control over their destiny. They're less immune. They're more immune to kind of the global moves and commodities and that sort of thing. And speaking of global trends, China has been a very big factor in what's moving companies and what's moving the investor sentiment, because it's a very big picture of global health. And overnight we got Chinese, yes. And obviously also it's been a very important debate topic and political topic, and people are wondering, what will Romney do? What's his view? Has Obama been handling relationship with China well? So political and economic implications all around. But overnight we got Chinese PMI, which came in stronger. That's a positive. People are worried, and this comes on top of a positive GDP, positive retail sales, a couple of
few things that are pointing into the positive direction versus the negative, which was happening about a month ago.
Right. And certainly this is a very contested camp. So every little bit of incremental positive news helps support the bull case. And we got a positive surprise from Peabody, which is the ExxonMobil of coal. It's the behemoth. And it came out with strong report, had a big gap up. This has been a stock that had caused a lot of pain for investors over the last year or so. So, when you look here, it's had a little bit of a run up on a little bit more positive momentum in coal. We've seen a bounce back in natural gas also, which has helped these coal names. Obviously, coal is very important for China. Right. What do you think? BTU?
Well, on the trading floor, some chatter has been that these coal names are acting better because they've been laggards. They've been laggards this year. They've been laggards even prior to that. A lot of people believe that coal is an efficient way to produce energy. I know I've been to China. They use a lot of coal. I tried to go for a jog and I almost coughed up a black lung. But anyway, as far as the price action here, it does look a little bit more constructive. And if you look at the chart of BTU, it finally reclaimed the 200-day. So it's trying to break this multi. Actually, it did it almost right here, downtrend. This was the last time it somewhat ignited, and now it's above the 8-day, it's above the 21-day. It's showing some accumulation. I think that this is something, if you want to be in a coal name, you could stay with this, especially like you said, earnings are out of the way and it could continue. So BTU looks a little bit better. Looks like it could be trending more to the upside, and a lot of the pain is out of the way.
Yeah, and it's also managing its costs well. So the company seems to be, again, taking a little bit more of an active role in controlling its destiny.
Well, it seems like, the specialty, which is your theme, is acting better than those that just go with the macro, because they're in control and they're tweaking their business, which is better.
Right. So, that said, BTU and the coal names in general are a little bit more commodity sensitive, and that's important to keep in mind. Another alternative to play coal, always in the back of your head, are rails, and Union Pacific is really the best position right here. It has coal exposure, but less than the Eastern rails like CSX and NSC, which have been, the earnings weren't quite as strong. And UNP is a nice one if you want some exposure to coal, but if you kind of don't want to go all in.
Right.
So, speaking of commodities and being vulnerable to them, Freeport-McMoRan is considered a very big, a name that goes in cycles. In 2008, we saw it be crushed, and it's obviously in a much better position right now. It reported earnings as well. This is a copper name. This is a gold name a little bit. I think it's about 10% gold, mostly copper. What do you think here about the chart?
I think the chart's been broken. A lot of people haven't focused on it. It did have a bounce off the lows as a laggard play. It's definitely exposed to the economy because what do they say? Dr. Copper. When copper is weak, that means demand around the world is weak, and when it's strong, this stock has a little gold in it too. So sometimes it's helpful for it, sometimes it's not. You look at the chart here. What you see here is it's decent. There's nothing really to grab onto here except for it just pulled back, and if you don't own it and you want to buy something, here's a level around 38. This is a nice sized gap up right there. This gap up came in on September 7th. It's still above it. It's just very choppy. I do think, there was a few days ago people were talking about U.S. Steel, and I think that this one at least has a chart that is a little tighter and potentially tradable. So for U.S. Steel, if you look at the chart here, you will see that it just had to move off the lows. It's trying to hold the 8 and the 21 day. Say as long as X opens or stays above, just say this 21.5 level, there is a shot that it takes back the 200-day above 23. So overall, this name has been annihilated if you look at it like this. But as a laggard play, it's trying to go sideways here. So above this level could be good for guys that haven't been caught in this whole mess. And I just threw it in there so we can go to the next one.
Yeah, no, I think these are really important points. On Mad Money, we're not really such big fans of Freeport-McMoRan, but one of the reasons I wanted to bring it up is it's such an important read on China. And it's important to pay attention to its CapEx trends, its capital expenditures, because Freeport, BHP, Rio, these CapEx trends are really important for names like Caterpillar, which at this point I think is a much better investment right here. As the FCXs of the world are ramping up their CapEx going into 2013, this should be a positive tailwind for Caterpillar. And as we've mentioned, Caterpillar is a really important read on China. I think only 5% of its sales are to China, but China is about 40% of the commodity demand. And again, Caterpillar, mining name. We talked back in September about how Caterpillar had disappointed, had a pre-announcement guiding down for 2015, but it reported a disappointing quarter, surprise, surprise, and didn't really sell off. So, from a chart perspective, you mentioned this with Celanese. Is this another interesting outcome when it disappoints but has a little bit of a bounce?
Well, this goes to show you that names that people love or love to invest in sometimes are trades, and sometimes you could use stops. And if you look at the chart here of Caterpillar, it's been gross, it's been annihilated. You go here, look at the highs here. You had many chances to get out of it. You had a high, lower high, lower high. It broke support here at 100. This is when it broke the 200-day. Look how long ago that was. So down here, perhaps it's time to start to nibble. Okay, it did just come out with earnings. It didn't get crushed. I actually traded it that day, went from negative to positive, and made some money there. Yesterday it was down a little bit. So I would say short term, if you're risk averse, be a buyer versus this 82 area. This 82 area is pretty big support. If it were to break that, the real line in the sand here comes in at 80 and change. If this market's not going to fall apart, if the market goes down 20% like some are saying, this is not going to hold 80. If the market's going to hold in there, we test 1380 and stick around there, I think buying it at 80, 82 is much better. And then at some point, could take 3 months, 6 months, 9 months, you're going to see better prices. I wouldn't go all in, but again, if you miss this major downtrend, you miss this major move to the downside, you know what, you have the luxury of testing a little bit here, but then wait for it to start acting better so you could add to it.
Right. So certainly a cyclical name, but this is where you get your beta. If you really believe in the U.S. housing turn, construction term, you can play that with Eaton, Weyerhaeuser, Emerson as well. If you think China is stabilizing, Caterpillar is a name to be in. You're not going to make that money in Clorox. So yeah, there's downside, but there's upside too. And this is where you'll really see some momentum if you do want to come in, if you believe in these trends.
Yeah, and Caterpillar is one down here, I think. Definitely worth a look, especially if you're not sitting in and holding your nose and going underwater like a lot of investors.
Right. So, as we're thinking about China, we're always thinking about mining and construction and infrastructure, but we have to add some glitz and glamour because, I'm a girl and that's what we like to do. So Coach was a glitz and glamour of yesterday, a downbeat day, but this one showed some real strength. a good quarter, people had kind of given up on it.
Me? Someone asked me, should I take it long into earnings? I'm like, I don't think it's worth the risk, but I'll talk about that after.
Yeah, and again, this is the difference between trading and investing. We talked also about the management quotient, Lou Frankfurt being, when it comes to a Freeport or a Caterpillar, management team can certainly manage the business effectively. But in retail, you're really thinking about merchandising and strategy and having a real vision. And Lou Frankfurt has showed that, has had a really strong track record. So if you believe in the management, if you believe in the trends, then, that retail name is important to come into. So Coach, we had couponing doing better from the discount perspective. The outlet stores are important for them. We see China still strong. It's so nascent in China that it's
nascent.
Not nascent.
Harvard grad.
There we go. But there's still a lot of upside ahead because it's not, when you're in such an emerging growth stage, it's the ups and downs of China PMI are not really going to move the needle for you. So, big bounce yesterday. And
yes, but it also goes to show you how, if you have a thesis that you stick with that you don't really take into earnings, there was opportunity afterwards. So I want to show you here on the chart how you can enter it without as much risk, if it wasn't, up to par, or because the chart was telling you that there wasn't that many big expectations there. And if you look here at Coach, you'll see, at least now earnings are out of the way. You have major support here. Major support really is down around 53.60. But if you go look at the 5-minute chart, I'm going to give you a little active trading course 101 here, Nicole. Take a look there. This was your gap up. Okay, gapped up on the earnings, but it pulled in within the first 30 minutes all the way down to 56. Okay, so right here, when it made your little wedge type pattern, you didn't have to take it into earnings, and you could have been a buyer right around 57. Yes, did you miss $3? Big deal, but you didn't have the risk. Here's your entry. You could be actually even trading it versus gap, and now you're in a position that you like for a recovery in China, a recovery potentially, I guess, for the high-end consumer. And right now you're in the game. So at this point, Coach is in there. If you entered yesterday, good job. And I do think the 200-day will be the next feather in its bag or cap. It's 61, so we'll see if it could reclaim the 200-day.
Yeah, for the year, it's actually not really up. So it is an interesting entry point that's positive, great if you were in, but still an opportunity. So,
yes.
Let's finish with a positive note, some hot stocks of late, because we did have a pretty downbeat day yesterday. Facebook, surprise, surprise, a real surprise. This has been a name that many left for dead, and we got some real momentum in after hours action after the quarter. People are talking about mobile actually having some traction for its first kind of full quarter with the strategy underway. So what do you think here?
A few things. First of all, again, anytime something's left for dead, the market tries to punish as many people as possible. And I think the short interest was above 10%.
Right.
So, another thing that was important is yesterday I had to go in my mentoring class, but, if you didn't take it into the report and you know what it's looking to report, and if the data is incrementally positive, you could trade it after hours. This stock was below 19 after it reported, and then went from down to positive to up almost 10%. You could have waited till after the report. Now, if you look at the chart where we are now, okay, on an individual basis, you'll see that here's some levels of resistance, okay, and this is where it stopped, 22. So if you knew 22 to 23 was resistance, after hours, there are a lot of guys that made nice money there. So at this point, it's going to have a big gap up. I would say in the first 30 minutes, see if it holds the gap. You do have resistance here at about 22.40. Then you have another set of resistance here around 23.40. And then you have the gap from last quarter's earnings. So at this point, what I would do today with Facebook is give it 30 minutes. Everyone's going to try and sell it down. And if they can't sell it down in the first 30 minutes, maybe you position versus that low. And then ride it out, because the news is out of the way. I still know there's a lot of smart money that bought in the private placement. Yeah. A lot of guys that got positioned that had a hold, that didn't sell, between 31 and 33. I'm not talking about the guys that chased on the IPO day above 40. I'm not talking about retail. I'm talking about smart institutional money that got sold this deal higher. So it's, these are the major underwriters are going to have to do something to get them back on target. And these are the guys that hold the longer term. So perhaps they're averaging in. So I do think Facebook doesn't have a 15 on it like Barron said. I do think it has higher prices, and today might be the first day to continue to ignite that move.
Yeah, Mr. Market or Mrs. Market can be very
Mrs.
humbling.
Market.
Very humbling.
Oh, it's a man session also.
Yes. So if you're bearish on a name, you can be taught a lesson after hours like we saw with Facebook. But, you know, like you mentioned, this is an important name to keep watching. Mobile strategy is very important for Facebook, also for Google and Yahoo. Mobile's been the big driver of whether these names are moving up and down. Facebook does have another IPO lockup expiration coming in November, which is important to keep in mind because that's been a big driver for the stock.
Right.
So, you know, and another hot tech name that we can finish up with, of course, Apple. Big day yesterday, iPad announcements, the mini, and then the other device. People were a little disappointed, but we still have earnings coming up. We want to hear about iPhone 5 potential shortages or maybe an outperformance that some aren't expecting. So,
well, at this point, you know, a lot of people were a little upset that own Apple, that have been holding Apple. But if you've been holding Apple for multi-years, you know, you don't have to be worried that it just pulled 13% off the highs.
Right.
And on Mad Money, which I think it was like 3 weeks ago, I talked about it from a trading perspective. And a trader perspective is different than an investment perspective. I was long Apple for, you know, 60, 70, 80 points, you know, primarily the entire time after last quarter. And then I said, if we break the 21-day moving average, a moving average that it's been following for almost 30 days, you know, tread lightly. It means that we could have some kind of correction going into earnings. And if you look at the chart here, you know, you will see that this was that day. This was the day I got stopped out around 683. This is the day it closed in the lows, broke the 21-day, and since then it became a trade. Trade has been trading it both long and short. Okay, this was the first time it actually, you know, hit the 50-day. I don't know why the 50-day is not in there, but I'll put it in there just so you could see it because a lot of you guys are trading with me. So, you know, I'll show you. First day it touched the 50-day, which is what I said it could happen after breaking the 21-day. A nice discount lower. You got a 3-day bounce. Then some guys shorted, and this time it closed below the 50-day, giving you a move to almost the 100-day. Then what happened? 3-day bounce where guys could have got short and people could have made money long. And then what happened again? Moved to the 100-day. What happened? Oh my goodness, another 3-day bounce before failing. And right now, this is definitely a loose type of dangerous action. I remember 2 days ago we had a nice long. Goldman Sachs said the third quarter would be okay. Barron's had a nice write-up, you know, and then boom, yesterday it opened weak, and then it tried to rally at the event, and then people just sold it, which is what they try and do on Apple. So at this point, you know, with earnings on Thursday, you still have 2 sessions till then. So I would say watch this 609, 610 area. If they sell down Apple and it breaks this before, you do have the 200-day. You know, if we get another inside day here, you could trade versus that. Okay, this is what I'm thinking on a bigger scale from Apple. Okay, people are saying Red Dog is the historic highs in. You know, it would be a guess to say no or yes. I do think probability-wise, every time you've had over a 10% move to the downside, you know, it does make new highs in the next quarter or so. So with that said, with the new products also, they're always a little bit shaky around the new products because it's such a high demand, it's hard to have supply for them. I actually think the price was high for the iPad mini, but I think that, you know, it's going to save some of their margins. And it's also not going to cause a price war because they don't want to start killing each other. As far as the iPhone 5, we know third quarter is not going to be great. You still can't walk into an Apple store and say, can I have an iPhone 5, please? And they put it on your hand. You got to go on a list. You got to go, you know, lottery, this, that, boom, bam. So, you know, there's going to be probably some soft numbers from iPhone 5, but a lot of people brought down those expectations.
Right.
So with that said, I think what's going to be important, you know, if you're watching this and I don't see you Thursday, is when you listen to the report, is A, third quarter could be soft. I think it's going to be all about the fourth quarter. Typically, they come out and they put conservative guidance on the following quarter. That's what they do. They cannot do that this quarter. They got to come out and say, demand, you know, supply is going to be there. A lot of the demand that they couldn't fill is going to go in the fourth quarter, blah, blah, blah. They're very optimistic and raise the guidance for the fourth quarter. They do that, and the historic highs aren't in. If they don't do that and they have it muted, it could still be choppy, but at some particular point, it resumes the uptrend, and, you know, investors could be high-fiving themselves again. But for right now, traders have been using it as a two-way street, making money long and short. So know your levels and know your time frame.
Some really great Apple points, and we'll be waiting with much anticipation for its report tomorrow, along with many other reports. It's a busy week. You know, keep slogging through, keep reading, keep thinking about some longer-term investment perspectives in addition to your trading strategies. And we'll see you next time. Thanks for being with us.